Ray Dalio runs the largest hedge fund in the world. Basically, he's been studying these multi-decade debt cycles for a long time. He continues to sound the alarm. And now Ray Dalio, this is like his Super Bowl because he keeps saying, pay attention to the bond market, pay attention to the national debt. We are in trouble.
The bond market is the basis. It's the backbone of all markets. It is the risk-free, meaning default-free, probably default-free, interest rate that determines what all asset returns are going to be. And when there is a breakdown of the supply-demand picture for the bond market, you see a certain type of market action. You see long rates rising relative to short rates. You see the currency go down. You see gold go up because there's a movement out of that bond market because there's a supply and demand imbalance. When that happens, that raises interest rates and it puts the Federal Reserve and other central banks in a bind. That supply-demand imbalance, in order to deal with that, when there's not enough demand, they're torn between allowing interest rates to rise and have the negative effect that that has on markets and the economy, or coming in and printing money, essentially, and buying bonds in order to provide the demand for those bonds that aren't there, and that produces inflationary pressures.
Now that bond market is sounding the alarm. And so Ray's saying the Federal Reserve, they only really got one option. They're going to have to continue to participate in actually devaluing the dollar. Stocks are going to go up, and that is going to be good for investors, but very, very bad for anyone who thinks that they can save their way to any sort of financial freedom.